Actually, just want to start off with the here and the now and what we got out of Powell yesterday, because the markets really interpreted this as perhaps the beginning of the pivot that we've been waiting for the last couple of months. Did you see anything new from what he said yesterday that he hadn't said before?
I think it's just confirming what we investors have been expecting. So I think if you go through every word he said, almost perfect. That's quite unusual,
Right, right. And in terms of what the market is expecting out of the next meeting, now it seems like people are really centered on a 50 basis points hike. Is that fair?
I think it's certainty, yeah. 100%.
Okay. And so what does that do to the dollar? Because we've seen a pullback in the dollar.
Yeah, the dollar has been pushed up, the two major factors, the Fed hiking cycle, the dollar usually appreciate, and then the Russian invasion of Ukraine, of course, which is bad for European currency. Mm-hmm. But now, the Fed is getting closer to the peak rate. Mm-hmm. So markets like us, we are anticipating that change.
Yeah. Well, what do you think is more important for the trajectory of the dollar here? Is it what the Fed do at the next meeting, whether they go for 50 or 75, or is it ultimately about the destination, where they end up, what that terminal rate is?
Yeah, the terminal rate is important, but more importantly is what they will do afterwards. So normally, regardless what the Fed is saying, once they reach the peak rate, you should look for rate cut. Even though central bank may protest, that's maybe not the case. Right.
So before we talk about rate cuts then, just talk me through how you were thinking about the various rate differentials between the US and Europe, because it seems to me that a big driver of where the euro is today is a function of interest rate expectations. So if in the near term the ECB somehow come out a bit more hawkish, so come with a 75 basis point hike in December and the Fed go for 50, is that bullish for the euro?
For the very near term, I think it's mainly because, every investor almost long dollar over the past 10 months. Mm-hmm. So as, euro start to rise, a lot of stop loss are triggered. So I think, if you look at interest rate differential, year to date has not been a driver. The 10-year spread, Germany, US, in a range, but the euro is going down straight line. So it's mainly because the war in,
the geopolitical
Europe.
concerns.
Exactly, yeah.